What's up, folks? We are going to be talking about something that has affected all of us recently. It's inflation. If you drive or if you like eggs, you know exactly what I'm talking about. Prices have been sky high over the last few weeks, and it looks like it might only get worse. There's even talk of a global commodity super cycle. It might sound a bit scary, but there are ways to profit from rising prices. Our next speaker is Ms. Chun from Saxo Markets. She has over a decade of experience in trading and asset management, and she's going to tell you all about investing in an inflationary environment. Over to you, Phelan.
Okay, hi, I'm Chun. Okay, let me just share the screen just a moment. Can you guys see my screen? Okay. Okay. You can see the screen right now. Okay, I'm sure that recently there's a lot of uncertainty in the market, and the market is very volatile, and many people are concerned like how this will affect their portfolio in terms of their the money in the banks. Yeah. So the current uncertainties include like COVID, Ukraine-Russian wars, sanctions, and China property crisis, as well as high inflation. So today I will just cover on the high inflation parts. So okay, this is the disclaimer. So I will just do a brief like what is inflation to just, I'm sure a lot of people knows what's inflation, but I just want to know like that the people to have a deep understanding what's inflation. So inflation is, in general term, we will say it's a loss of purchasing power over time, and it means that to the money today, your dollar will not go as far as tomorrow. That means, okay, today you can purchase maybe an apple, but tomorrow $1 may not be able for you to purchase an apple. So it caused by a rise in the price of goods or services. And inflation is a rate at which value of the currency is falling, and the general level of prices for goods and services is rising. Also, inflation also aims to measure the overall impact of the price changes for diversified sets of products and services, and allow for a single value presentations of increase in the price level of goods and services in an economy over a period of time. So, so inflation we usually express as a annual change in price of a basket of goods and services that is included. So in the US, in the States, they have two main inflation gauge. One will be the CPI, the Consumer Price Index. Another one will be the Personal Consumption Expenditure Index, the PCE. So CPI is actually the measure of the cost of things urban consumer buy off the pocket, but PCE is actually a laggard, but it measures the things that people consume, including things they do not pay directly. Like one of it will be like healthcare, which usually covered by insurance and the government benefits. So these two indexes are actually built slightly differently. So US Federal Reserve actually targeting around 2% annual increase in the PCE index over on the average over time. So a little bit of consumer, like just a little bit of consumer price inflation generally is viewed as desirable, is actually favorable. So it gives our company an adjustment of to the changes in the economy without forcing off the business. For example, like labor costs and raw materials that may the cost may go up throughout the period. So you can see that from the chart. The CPI index for US in the February actually rose to 7.9% from a year ago. So it actually hit the highest level since January 1982. Excluding foods and energy, if we exclude these two categories, it also the core inflation still rose 6.4%, which is also the highest since August 1982. So another one of the index is PPI, Producer Price Index. So it's actually a group of index that calculate and represent the average movement in the selling price from domestic production over time. It's a measure of inflation based on the input cost of producers. So PPI is a bit different from CPI in terms that it measures cost from the points of industry points of view instead of day-to-day consumptions. Yeah, so it measures from the okay, and the data usually classified under three main categories like industry, commodities, and as well as commodity-based final and intermediate demands. So back to our back to Singapore. So how is Singapore inflation goes? So currently it rose to 4% in December 2021. So it's the highest in 9 years. Yep. So if we look at the property, so HDB resale prices was up 12.5%. It actually hits the highest increase since 2010. And electricity was up by 5.6 from Q1 2022. And if look at bus fare and MRT fares, right, it's up by 2.2% in 2021. And for the younger crowd, okay, for movie ticket, the price, the weekend movie tickets, right? In 1990s, we only pay like $6. But 2021, we pay $12.50. And currently for 2022, we have to pay $14.50 for a ticket. So that's how you feel the inflation. You are paying actually more. If you compare to 1990s, it actually doubled. Yeah, because in 1990s, we only pay like $6 for tickets. So what caused inflation? Okay, there's few drivers. We categorize them into 4 main drivers behind inflation. So the first one, demand pull inflation. So it happens when there's an increase in aggregate of our demands. So when the demands of output exceeds what the economy can produce, it actually increase the prices. And that means the buyers actually beats the price up against and cause the inflation. This as if demands also refer to as too much money purchasing too few goods. Yeah, and usually occur during expanding economies. So for example, an increase in the government spending can also increase an aggregate demands. And okay, so I'm also touching on the increase in money supply. Yeah, because when the government actually increase in spending, the money supply actually increases. So this actually rises price as well. So so as a result, the purchasing of the imports decreases, while the buying of exports for foreigner actually increases, and this also increase the level of aggregate demands. Yeah. So and let's move on to the second driver, which is the cost push driver. The cost push driver is the increase of the aggregate supply of goods. So it's actually the opposite. So when the cost of the raw materials, labors actually pushes the I would say pushes the price up. So this means when there's a push up by increase in the cost, it can be to labor, capital, land, and also the basic cost for a company to run. It increases the cost for the overall for a company to run. Yeah, and this pushes the price up as well. Okay, so let's concentrate on the raw material, because that's one of the core, I would say, the driver for this inflation at right now. So we know that the raw material actually increases due to the Ukraine-Russian war that's happening to right now. So how this Ukraine-Russian war actually affects the, I would say, the raw material, the commodities right now. Yeah. So we are aware after the Russian tanks and military vehicles actually entered Ukraine in February 24, the commodity prices actually surged up with oil reaching 100 a barrel and aluminum actually coming into a record high, and as well as wheat. And why is this happening? Yeah, it's because as we can see that Ukraine and Russia are the main exporter for a lot of the commodities. So let's touch on the first one, the energy. So one of the commodities that affected by the Ukraine and Russian war is oil. Yeah, so there's crude oil as well as gas, and some of the analysts actually estimates that this war will lead to a rise of oil price to 150, and currently it's trading at around 115. Yeah, it's getting near. And Russia is the why is this happening? Is because Russia is the largest oil producer, and at the same time, it's the second largest gas producer. Yeah, it's after US and Saudi Arabia. And this disruption of this supply actually due to we can see that the disruption actually caused all these prices to actually fly to the roof. And Russian war has already disrupted more than 2 million barrel of crude and oil product supply from the world's second biggest crude exporter, according to S&P Global Commodity Insights, right? Yeah. And the biggest casualty so far is, we'll say, is Europe, because Europe actually, they depends on Russia heavily. They imported about 30% of the oil from Russia, including 1.5 million of diesel and gasoils from them. So this collapse in the demand for Russian oil, it seems as it actually caused the Europe to have fall short of supply. So European Union actually struggled to impose oil embargoes on Russia to turn off the Moscow's biggest source of revenue. So while the US also imposed a sanction against a ban on the Russian oil, and this actually cuts off EU supply and lead to actually increase in the prices as well. So another one will be natural gas, because the natural gas prices in Europe actually climb to all-time high. So currently trading around 345 euro per megawatt per hour. So let's move on to the next one, the metals. So not only the energy that was affected, now there's other like metals that also affected by the Ukraine-Russian war. Let's touch on the nickel, because nickel was I'm sure that most of the investor actually heard about, nickel's price was reaching all-time high. Yeah, so all this, for the nickel part, I will leave to a later part. I will talk in more details about why there's a price movement and why nickel actually stood out from the other metals. And agriculture also affected, and the most affected one will be wheat. Yep, because Ukraine actually is one of the biggest suppliers for wheat, corn, and also sunflower oil in several parts of the world. So after okay, maybe I just share more on the details, like how this Russia and Ukraine account for a total of like 30% of the global REITs. Yep, and these two countries actually together also account for 80% of the global exporter for sunflower oil. So if you go to NTUC recently, or maybe Saxo, you may find that all the oil prices actually increases. Yep. And this crisis is also being compounded by a rise of fertilizer prices, so which is causing the farmer globally to reduce the amount of land they are planting. So Russia is also a major exporter of these soil nutrients like potash and ammonia and urea. Okay. Okay, let's move on. So how this Ukraine-Russian war actually causes this supply chain disruption? Yeah, we can see that the Ukraine war threatened like stable crops, right, from Europe's key growing regions, which means also escalating the food prices, and that already have been felt, by the consumer around the world. And will this get worsen? Yeah, maybe that's one will be like one of the question that we want to answer, or we want to really know. Yeah, so this also actually rise the threats of a foodborne hunger crisis. So the UN actually warned that there's already record a global food cost of surge for another 22%. Yeah. So another one will be a higher shipping costs and energy inflation, and also extreme weather and labor shortage also make this harder to actually produce food. So a supply is shrinking, like gains stockpile are posed to a few straight annual decline. Yeah, and this is actually according to the International Grain Council. So the war in Ukraine stands to only push the price to further up. Yeah. So now we can see the global food prices are at an all-time high, and with a branch of UN index soaring to more than 40% over the past 2 years, and food insecurity has doubled in this period of time, and 45 million people are actually estimated to have to be on the brink of like running out of food. So which actually hit all-time high in 8th of April. Yeah. And okay, let's move into like how can we actually invest to actually protect our portfolio from the inflation. Okay, so inflation occurs in market economies, but investor like us, right, we can plan to for inflation by investing in asset classes like that actually tend to outperform during this inflationary climate, is inflationary market that I would say. So you can actually diversify your portfolio. Yeah. So or into all these asset classes like gold, commodities, real estate, or REITs, and treasury inflation protected securities like TIPS and Bitcoin. Yeah. So many people have looked to gold as an alternative currency, particularly because like people like countries use this as a native currency for storing your value, for storing your your value. So commodities and inflation have a unique relation. So so commodity are also used as an indicator for inflation to come. So before inflation go up, usually commodities prices will move first, will rises first. So does the price of the product and so does the price of the product of the commodities that is actually produced. So let's look at gold. So gold is actually a widely used, I would say, asset classes for a lot of hedge funds, family office, as well as like mutual funds. They use it as a hedge against inflation. And many people actually have a look to gold as alternate currencies. Yeah. So inflation is caused by like just now we say it may be caused by a driven of supply and demand and all that. So can we say that gold is a true perfect hedge against inflation? So when inflation rise, central bank tend to increase interest rate as part of the monetary policy. So holding on to asset like gold, they may not pay a yield. Yeah. So if you like hold on to stocks or maybe like a REIT, you know, it may, or bond, it may pay you yield, but for gold, it does not pay you yield. So yeah, so when the rates interest rate is go higher, that means the yield will go higher, but gold will not give you I would say interest rate. So this will be one of the questions that you want to ask, like whether gold is a good hedge. Yeah, but usually when market is unstable or when inflation is high, gold is usually gold prices tend to move up. Yep. So you can consider like gold as one of the a strong asset to hold in your portfolio in terms of diversification, in terms of to have a gain in the inflation environment. Yeah, and just now we talked about commodity has a very unique relations, right? So so that's why I will cover commodity in detail in the later part. And real estate, why is real estate a good protected asset classes, inflation protected asset classes? So when inflation actually go up, real estate incomes like rentals actually will go up as well. So how this real estate works well? So real estate, investing in real estate actually work well during inflation time. So I think most of us also can feel that like all the property prices are going up and rental as well. Yeah, but usually if you invest in real estate, you need a bigger sum of money. Yeah, so and that's why not many people can actually invest heavily in real estate. So there's always an alternative. There will be REITs. So later I will cover about REITs as well. So another reason that people tend to make did not heavily in real estate is because it's less liquid, right? You can't really like buy sell that frequently. Yeah. So REITs are company REITs. So it's a short form of real estate investment trust. So I will just call it REITs. Yeah, going forward. Yeah. So it actually operates like a mutual funds. So it has a portfolio of all the I would say different real estates. So it's also divided into like different sectors. Like some of the REITs are specialized in logistics, some are specialized in the office, and some specialize in commercial, and some have a mix. So I will go into details later as well for this one. And okay, treasury inflation product securities we call as TIPS. So this TIPS is actually a US treasury bond. It's an index to inflation in order to actually protect the investor from inflation. So this TIPS actually pay out a fixed rate. And it has 3 different maturities like 5 years and 10 years and 30 years. Yeah. And TIPS, even though some of the these TIPS may appear to some of the like attractive investments, there are few risks behind it as well. So if there's a deflationary, or we call it like the CPI is falling, like because we will know whether we hit the CPI already peak. Yep. So if we are not hitting, no CPI suddenly falls, yeah, the principal amount may drops. Yeah. And it function like it just function like the bonds. So and tips are very sensitive to changes like current interest rate as well. So if you sell your investment before maturity, you may lose some of the money as well. Yeah. And lastly will be Bitcoins. So I will cover tips and Bitcoins lastly if we still have time. So okay, let's go into gold. So by looking at these gold returns in different currencies. So this is like the return based on like gold versus USD, Euro, and Aussie yen, and so on. So just look at the USD part, and we can see that gold has been not been quite stable throughout the years. Yep, not big movement, but there's in 2021 is actually a negative of 3.6%, but this year has grown, gave a return of 8.2%. And this is the current chart for gold. So gold actually headed for the highest weekly on 8th of March, and since then the demand being driven, and this is driven by the demand for safe haven. Yeah, because we always call gold as a safe haven instruments. Yeah. It's not actually just for hedge against I would say inflation, but also against like uncertainty markets, like because of Ukraine Russian war invasion, and this caused of high uncertainty market, and that's why a lot of traders and investors are turning into gold. Yeah, so and that's why we see a surge in the commodity prices. Yep. Okay, let's move on to the second slide. So you can see, look at this chart. So after the Ukraine-Russian war, right, the total holding of gold ETF actually jumped by 134 tons to a 1-year high at 3,246 tons right now. Yeah, with more than half the increasing during the gold recently $175 correction. So US 10 years real yield also saw gold supportive collapse back to negative 0.9%. So beside this, I would say hard to qualify political uncertainties, right? We maintain our bull outlook on the this being belief of inflation will remain high. Yeah, with central bank also struggle to stem the brakes on the risk of economic slowdowns. Yeah, so we also believe that the Russian-Ukraine crisis will continue to support the prospect for higher precious metal prices, not only due to potential short-term safe haven bids, but also more importantly due to this tension, which means inflation was still high, will still remain high, and then the growth remain low, and central bank's rate high expectation is getting like lower as well. So this is a chart for the gold USD. Yeah, gold versus USD, and we can see that after it hits the 2050 level, it actually dropped down to 1900 level, and now it's trading around 1950 level. Yeah, so it has been trading steadily as as most of the investors continue to think that the monetary policy tightening in the US against the inflationary impacts of the Russian war, the Russian-Ukraine war. So this long liquidity for leverage funds who actually had loaded up on futures in the recent week may have run its course. Yeah, and that's why we see a sell down. But in the longer term, we can see that investors have been continuing to buy into all this gold ETF since the war began. And during this time, a total holding actually jumped. So that's already like shared. Yeah. And by looking at the chart, we can see that the key support level will be 1890 level. And if it breaks the 1959 level, right, it will signal a fresh upside potential, a new upside potential. Yep. So gold is being actually okay. So how can we invest into gold? So after sharing that, gold is a good hedge, and gold will be a good asset to diversify. And how can we actually invest into gold? So there's a few methods. One is buy into the gold ETF. Yeah, another one will be the buy into the gold USD spots. Yeah. So just look into the gold spots, right? When you trying to buy into it, it's because it's a leverage product. You have to actually calculate your initial, margin of initial margin that is needed, and what is the minimum unit that you can trade, and all these are actually available on our platform as well. So and also gold ETF, gold forex forwards, forex swaps, and option futures are also available. Okay, just maybe let's look into the ETF in more details. So this SPDR gold ETF is actually listed in SGX. Yep, it tracks the gold prices. Yeah, and we can see that the tracking error is pretty low. Yeah, it's 0.033. So it really track the gold prices very I would say closely, and expense ratio is pretty low, 0.4%. Yep, and it has a very big market cap for 61.3 billion. Yeah, so it's I would say that the liquidity for this gold ETF is good. Yeah. So after talking about gold, next one will be like, can we actually look into silver? Because usually gold and silver, they move quite in line. Yeah. So looking at the silver, right, still trading 12% away from the recent high of $30 area. Yeah. So which is touched by February 9, 2021, and after it touches the high, it actually dropped all the way down to around 21.47 price area, and due to the US the current Ukraine war and all the uncertainties, silver actually moved up and hit around like 26.50 area, and now it's trading around 25.51. Yeah. So another indicator that we look into will be we'll compare the silver and the gold and silver ratio. So gold silver ratio currently trading around 77 handle, and this tells us that it's actually trading in the middle of the range that you formed since September last year, and the key levels has been around 80. Yeah. So this is actually at as an assistant level since 1996. And why do we actually look at this? And this actually give us that indicator that telling us that silver is actually moving behind gold. And so like maybe now gold is actually running again, running faster than silver, and this may give a trader an indicator that maybe it's the right time to look at silver as well. So yeah, so currently the trading around this level. Okay, let's move on to the next one. So okay, just now I also mentioned that a lot of the industrial metals like aluminum, copper, nickel, zinc, yeah, the supply is disrupted by all this I would say this crisis. Yeah, so another one, okay, so this chart actually shows that this wisdom three industrial metals indexes actually tell you about the how the commodity, the metals commodity performs. Yeah, so we can see that in February, the prices actually jumped, yeah, from the $18 level all the way up to $28 level. Yeah, and this chart actually monitor the all the warehouse stocks for different commodities as well. Yeah, so so Russia actually is the sixth largest coal producer with output 400 million. Yeah, and because of this Ukraine Russian war, I would say that all this coal, aluminiums supplies are affected. Yeah, and the most recent surge in the price came after Australia decided to ban on the exports to Russia, and all these materials are actually used for making metals. So and that's why it all this eventually trigger the metal prices to move up that much. Okay, let's touch on the nickel. So on 8th of March, nickel prices has moved up more than double to over 100,000 a ton, as a major crisis that one of the hedge funds, Singapore Holding, was forced to buy a large amount to cover its short positions. So this market squeeze, which actually took place that worry over the supply delays, yeah, from the Ukraine conflicts. And this actually also triggered the LME, the London Metal Exchange, to halt trading. Yeah, so Russia actually supply about 10% of the worst nickel, the worst nickel whole total, I would say total supply. Yeah, nickel, which is used in the lithium-ion battery, and also used in producing stainless steels. Yeah, so it's actually a very I would say important metal, the commodities, the raw material for a lot of industries. So this high nickel prices have added to the also added to the trouble of the electric car makers. Yep. So they have been struggling with the rising costs of the raw material, such as lithium and cobalt as well, in the past few months. So all this high I would say high input costs actually trigger some of the market leaders like Tesla and I would say Lucid, yeah, or the Chinese some of the Chinese electric vehicle makers also they have raised in their their sales prices in the recent months as well. Yeah, so this is one of the analysis that is covered by our strategies, one of the commodity strategies. So with Russia being the second biggest in the supply of the raw material to the global, we are also currently witnessing some of the historic movement into Russia going isolation and self-sanction by the international community, cutting a major supply of all the energy metals and crops. So we can see that the price move actually from the starts, right? From the start of the Russian war, all this different commodity actually rises hugely. Yeah. Okay. Commodities actually is expanded. So the Bloomberg Commodity Spots Index climbed by 8.3%. Yeah. And thereby giving back most of the gains since we see during the first week of the Russian invasion. So Russian focused company like crude oil and wheat actually took a very big hit back. Yeah, it hit all the way up, it raised all the way up, and now it come down quite a lot, and that's why some of the I would say some of the prices, right, actually move very I would say has a big move. So let's look at the commodity volatility, and you can tell that the energy sector, the commodities are moving are the most volatile, yeah, during this period, and followed by industrial metals and the grains. So during the this by looking at the day volatility on the BCON sports index, yeah, that was traded during 9% and 19.1%, but since of the February 24, it has been surged higher and reaching around 31 level. Yeah, and that by force many of the hedge funds to actually target a certain level of volatility to cut their expenditure as well. So the jump has forced by a spike in energy, industrial metal and grains. Yeah, and we can see the volatility actually increased by double since then. As long the volatility remains being stable, trends and momentum following by the hedge fund will normally buy into the strengths and sell into weaknesses. So the mentioned volatility surge actually helped to expand the current behavior where position have been cut to pre-war level. So the next question we'll ask, like, how can we actually invest into the commodities? So you can invest into metal spots like the gold versus dollar and silver versus dollar. Yeah, but not all the metals has a metal spots. So you can also look into commodity futures like the oil futures, wheat and silver and gold futures. But usually futures require I would say like one contract is usually bigger, so people tend to think that you are exposed to a very big risk using these instruments. So alternatively, you can also look into commodity ETF mutual fund that actually track the commodity index, agriculture index, energy index, and metal index. Or you also can invest into commodities stocks. Yeah. So one of the commodity tracking funds trading index will be like Invesco DB Community Index that actually tracks the Bloomberg Index, the Bloomberg Commodity Index. Yeah, so it actually exposed them to future contract like different 14 future contracts of the physical commodities like heating oil, Brent crude, gasoline, gold, wheat, aluminum, natural gas, corn, soya bean, zinc, copper, sugar, silver. So this ETF has a market cap of 4.38 billion, and the expense ratio is around 0.88%, which I would say is quite reasonable. Yeah. So liquidity is the average trading volume is around 3.66 million. So it's pretty, I would say, pretty liquid. So if you are interested to actually buy into like agriculture, so you feel that futures may not be suitable for you, you know, you don't want to take up leverage products, and maybe you can look into like agriculture fund, which tracks actually like 11 different futures contracts, like soybean, corn, sugar, coffee, cocoa, wheat. Yeah. So this agriculture funds that I'm talking about actually has a market cap of 1.72 billion. So it's a recent, I would say it's a decent size. Okay. Okay, let's move on to REITs. So I understand that REITs, there's a speaker already covered about REITs. So I will just cover briefly, yeah, on this. So as you know, that REITs is actually one of the Singapore's, I would say, popular investment vehicles. Yeah. So REITs actually generate income from the, I would say, the rental. Yeah. And Singapore has a 44 REITs, property trust, and with a total market cap of 115 billions. Yeah, as of 31st December 2021. So Singapore has the largest REITs market in Asia, and it's actually increasing. And I would say that has becoming a global REIT hub. So and Singapore REITs actually represent around 12% of Singapore listed stocks. And based on the MS regulation, you know, Singapore REITs is regulated, and the maximum that the Singapore REITs gearing ratio is limited at 50. So based on the 44 REITs, it has the total Singapore REITs gearing ratio has an average of 37.4%. And yeah, it has I would say the compound annual growth rate around 13% over the 10 years. Yeah, we'll share further. I will share further in the next slides. And as REITs that okay, I'm sure that all this are okay. Then let me just move on to the next one. So okay, so there's two indexes that you can track the the Singapore REITs, how it performs. So one will be the IHS REITs, and one will be the FTSE ST REITs index. Yep. So we can see that these two indexes actually outperform of STI throughout the time frame of 10 years. Okay. And okay, this chart, this table actually shows you the correlation between Singapore REITs and other asset classes. So let's just look at the top two row, and we can see that the correlation between REITs and global equities and global bonds are around 0.7 level. So yeah, I would say that it's not very correlated. Yeah. Okay, and let's look at the average dividend payout, yield payout. So Singapore REITs are divided into different sectors that we can see 1, 2, 3, 4, 5, 7 different sectors. So by the highest payout will come from the retail REITs and office REITs. They pay out around 7.7%. Yeah, followed by industrial REITs around 6.4%, and diversified REITs around 6.1%. And the lowest is from the hospitality REITs, payout around 3.7%. So this is I would say a very good chart, a graph that actually shows the AUM, the asset under management for all different REITs in under different sectors. So we can see like under the industrial sector, Ascendas REITs has the highest AUM. Yeah, it actually manage 17.7 million of assets under their management. And then commercial will be, the highest will be Capital Integrated Commercial Trust. It actually managed 22.7%. And retail will be Medbertree Commercial Trust. And we can see that for the retail, right, it's quite, I would say, the biggest will be these two, like Medbertree Commercial Trust and Medbertree Commercial Asia. Yeah, followed by hospitality and healthcare. And okay, like among all the different REITs, I would like to concentrate on the industrial REITs and retail REITs. Why do I choose these two? Is because industrial REITs, right, during I would say this COVID crisis, during crisis, right, there's a lockdown and many I would say consumer move into I would say online shopping, online grocery, and yeah, and that's why we will see that a lot of the storage has been like storage area needed, and that's why we see that there's growth in the industrial REITs. Yeah, so let's talk just want to share about the biggest one will be the Ascendas real estate REITs. Yeah, so he has a very decent debt, I would say the debt ratio around 39%. And Ascendas REITs actually has a very, I would say, diversified portfolio. So it has around 61% of his total properties in Singapore, and 40% in US, and 40% Australia, and the remaining in UK and Europe. And its business are also spread out into like business space, logistics, industrial, as well as data center. Yeah. So Singapore actually has, in Singapore, it has 96 property. Yeah. And followed by the next one, the biggest one will be United States. It has 41 properties, and Australia has 34 properties. So if you want to know about more details on the different REITs, actually, I feel that SGX actually have a monthly REITs update, and that's very useful. And also you can go to I would say the REITs company website to find out more like what are the properties they own and all that. So okay, maybe just let me touch more on the last two, the tips and Bitcoins. Yeah, so because for tips, you can't really invest into tips that easily. So some of the instruments that you can actually tap through will be like tips mutual fund and tips ETF. Yep, and that actually that you can actually find all these products through our Saxo platform. And we do also provide like Bitcoins, like we call it as crypto forex. Yeah, so it's like Bitcoin against USD, Bitcoin you get against Euro. Yeah. Okay, I still have 5 minutes. Maybe just let me move to the Q&A. So okay, we do so thank you for the for attending. So I just want to share that all these resources actually are under our research hub. So if you have an account with us, you can actually go under this research hub and to download all these research papers. Yeah, and we do also host like frequent calls. Yeah, and all these calls are like helped by our, I would say, strategies as well as our sales traders. Yeah, so just let me look into all the questions. Okay, one of the question will be like any ETF to recommend to counter this high inflations. Okay, okay, if you are interested to buy into gold, right? Just gold itself, you can look into our gold ETF. But if you want to actually you're interested to buy into commodities, that's a commodity ETF. Just like I mentioned, there's different commodity ETF that track all the commodities, or you can just choose like metal commodities, or you can have just energy ETF, yeah, that track energy ETF, as well as tips. Yeah, you have tips ETF as well. Like one of the biggest one will be like iShares tip bond ETF. Yeah, that track the US Treasury bonds. Could you maybe just let me pick another question? Okay, one of the questions like how high could this price of gold go up to? Okay, based on the charts. Okay, let me go back to the gold chart. Okay, the highest it has gone is around like 21,000 level. Yeah, in 2020. Yeah, and recent high it hits 2070 level and currently trading at 1950. And a lot of the analysts are forecasting that gold will actually hit 2,500 level. Yeah, but this is really I would say like forecast. Yeah, because it really is driven by supply demand as well. Yeah. Okay. Okay, I can see that's many questions, but due to the time, I will end
We
my
actually
presentation.
got enough time to take a couple more questions if you
Oh,
want.
okay. Okay.
So is it okay if I just check with you this question, which is about looking forward for inflation and how long you think it will last? And when
Okay.
people ask about, how long inflation lasts, inflation might last forever. But I think people are asking elevated levels of inflation, like these super normal levels of inflation. How long do you think this might be something we have to deal with?
Actually, even the Fed, US Fed are unsure how this will actually last. Yeah, last year they have been talking that inflation should end soon, and we can see that the February number are still actually beats the high, and from my point of view, I think the inflation will still go on for another year, for at least this year. Yeah,
Mhm.
and it really depends on how the I would say different countries' policy come into play and how they actually trying to actually pull down the inflation. Yeah, but because there's a lot of uncertainties, I would say the Ukraine-Russian war, that's no one can really uh, really can control, and this is happening, and that actually boosted the inflation number. Yeah, so I think from my point of view, I think there's at least another year to go.
And final question for you, just before we run out of time,
Yeah.
is there are some analysts who have been actually questioning the whether the raising interest rates will bring down inflation, as in because inflation has gotten so high, the Fed is acting so late, they don't know whether it's going to work. Do you think there's a risk actually that we end up in this horrible people are talking about stagflation phase where we have elevated inflation for a long period of time together with a almost recessionary economy?
I think at the moment, inflation is starting to get more focus right now, because I think previously people are talking about inflation and how can we actually curb this inflation, and now we are saying we may move to stagflation, and from my point of view, I think it's possible. Yeah. So but I would say how we can actually like asset, like I would say a portfolio. You can do diversification, right? You can do buy into all the other asset classes. Yeah, I'm sure that not many retails, they do that. Yeah. So most of the retails portfolio, they consist of all these like heavily stocks. Yeah. And I see that if the uncertainty still remains, all these prices will come down and really hit your portfolio really hard. So I will really suggest that you can really diversify your portfolio into other asset classes. Yeah, and that really hedge your portfolio well. And at the same time, you may grow your portfolio at the same time. Yeah.
Yeah, that makes a lot of sense. Thank you so much for that, Chun Fei, and thank you for the very comprehensive presentation. So folks, inflation really something that we need to keep an eye on and we need to control. Thank you again, Chun Fei. We're moving on to our final session for this afternoon. But before that, just a reminder to our viewers, please do also check out the exhibition hall. So after our next session, you might want to look at the great promotions and all these brokers have set up inside the exhibition hall to access that. That's actually from the main lobby. Bottom left corner, there's an arrow, brings you to exhibition hall. There's even a live chat function. The staff from all these companies are there. They'll be happy to talk to you if you have any issues. It's very much like the actual in-person events.